So if you're watching this video, you're probably asking yourself if you should invest in New York City real estate or not. Now, I'm going to be very, very real with you in this video. So I am a real estate agent, but I'm not the type of real estate agent who tells people to do things just because it will benefit me. I think that's absolutely insane. And unfortunately, there are a lot of people in the industry who still do that. So you're always going to find nothing but honesty in this channel because I want to give you guys the truth. And if something is not the right move for you, I want to be as honest as possible. Now, there's no black and white answer to this question because I think that investments are always a personal decision. Now, there are reasons personally why people invest in New York City real estate. I'm going to go with some of the facts of why people choose to invest in real estate in New York City or not. So a lot of investors like to look at two different things, cash on cash return and cap rates. If you take a look at most New York City properties, both of these things are not going to be very good when comparing it to other properties around the United States. That's just a fact. And honestly, it probably doesn't come at much of a surprise to you in this video. There are certain pockets always where you might see some better numbers than others. You have to remember, New York City is a really big place. So we're talking about a lot of areas here that you have potential for investing in. You're definitely going to see variations when you're comparing all these different boroughs and all these different neighborhoods in the boroughs. So a lot of people invest in New York City real estate based off of appreciation. So they're trying to forecast, predict, or hope that they're going to get a certain amount of appreciation in a certain amount of years on a property. I personally do not like ever suggesting that somebody invest on appreciation because I think it's absolutely crazy to not be able to get a cash on cash return on a property and hope that a property just appreciates over a certain amount of time. I'm the type of person that if you tell me that that is your strategy, is just solely appreciation, my argument on that is like, why not just invest in the stock market or the actual like money markets where you can just like hope that appreciation takes place there as well, I guess. So that's kind of my argument for that, is I think that there should always be some type of cash on cash return that you're taking out of it. And that's why I say that most areas of New York City, the cash on cash return isn't that strong. Then you're going with that appreciation play. So some people that live here would rather invest in property around where they live versus another part of the country that they know nothing about or just don't feel comfortable investing there. I do understand that because it can take a toll on you to randomly invest in these other areas that you're trying to make sense of with the numbers. You just don't know anything about the location. So I do understand it from that perspective. However, you just have to really, really break down each individual property and neighborhood here in New York City. So when I have seen people invest solely for appreciation, I've talked with these investors where they thought during a 10-year period they were going to get this crazy amount of appreciation in a certain neighborhood or a certain property, and they didn't get what they thought. I have seen that so many times. And on the other side, I have seen people invest in these neighborhoods where they paid a certain price, didn't even really think too much about it, and then that neighborhood blew up, exploded, and now that property is worth so much more than they ever thought. That happens as well. So let's give you an example in this video. Think about if someone invested in Williamsburg 15 years ago versus what it's worth today. So that's just an example of a neighborhood that really exploded over like a 20-year period. It does happen, and appreciation is a real thing in New York City. However, sometimes people think that they're going to get this crazy appreciation in even a shorter amount of time, like 5 years, which I typically like a longer buy and hold. If you are going with appreciation, which still is not my favorite strategy, you have to really buy and hold that property for like 20-year plus. So that's just something to consider. So if you are looking for cash returns, there are ways to buy distressed properties in New York City where you can get a good amount of cash return on that property. That is going to be your best bet, is look to buy distressed properties. It's going to be very hard to get these type of returns on market properties. Not impossible, but just very, very hard. So I'm going to break down a couple different types of investments, like different ways you can make money off your investment properties. So the first is going to be long-term rentals. This is the most traditional type of rental. So someone's staying for a 1-year lease or hopefully longer than that. Now, in a traditional long-term rental, the problem with this is it's very hard to find a cash flowing asset in New York City with long-term rentals. So a lot of landlords fall into becoming long-term landlords in New York City because they had a property, wanted to move outside of the city, and just kind of became a landlord. Now, there are also other landlords that they own an entire building or own a little small community or something like that. So they're making money off of multiple units that they have, or they're making money off a multifamily that they have. So those are going to be your most very common long-term landlords in New York City. People who kind of fell into being a landlord with their one unit, or people who intentionally have multiple units. They have multifamily, something like that. The next type is going to be midterm rentals. So if you follow the investor world very closely, like nationally, midterm rentals has become like the latest craze, because what is a midterm rental? Midterm rentals are staying for more than 1 month, but staying for less than a year. It could be 6-month term, 3-month term, 2-month term. This is very, very popular in New York City. However, there's never really been a name for it. People don't really talk about midterm rentals. They just say that it's a short-term lease. Short-term is referring to anything less than 31 days. So that's actually what short-term is. Now, short-term is illegal in New York City. There's very, very, very few scenarios where you can do a short-term tenancy in New York City. So short-term is pretty much out of the question. That's not going to be your investment strategy. However, midterm can definitely be your investment strategy, depending on your building and the rules there. But if you have your own place or a multifamily, you create the rules. So you can do midterm rentals. And there are so many people who need to come to New York City for a short amount of time or try New York City for 2-3 months. I think that midterm rentals are a fantastic strategy for investment properties here in New York City. And typically, because they are a shorter amount of time, you can have them pay a little bit of a premium for that amount of time. So another very popular investment strategy in New York City is roommate house sharing. What do I mean by that? So if you have a 4-bedroom home, you either could do two things. You could find 4 people who want to share that home as roommates, or a family who wants that 4-bedroom home, or you can try to find 4 different roommates individually and kind of place and match them in a home. I know that sounds like very, very annoying for some people, and people are like, I don't want to be bothered with that. But you have to think about it on an individual level. These 4 people, the 4 roommates, let's use that scenario compared to you finding 4 roommates. The 4 roommates that come in together are all in this together. They're all probably friends or know each other in some capacity. They're going to try to negotiate down with you, most likely, to a certain rate because you don't have to do any work. Versus if you charge individually, each one of those people, say like $1,000, you can charge $4,000 because each one of those people are paying you separately $1,000, and they're not all friends. They don't know each other. They're paying a premium because they don't have the 4 or the 3 other roommates to live with. They don't know anyone in New York City. So they're like, okay, cool. You can just match me with roommates that seem cool and I can find a place to live. They're willing to pay that little bit premium so that they don't have to go out there and make friends with 3 other people and find somebody to live with. That's another way that you can make money in New York City. And it's a really, really good strategy for New York City over other places because I think the value of that roommate share is crucial here in New York City. And I actually know a lot of people who got into New York City with roommates that way, like roommates they were kind of matched with instead of people that they knew and decided to live with on their own. Sometimes you just have to get a little creative to make your property cash flow. And that's really, really what I've been specializing with over the years because I think that so many people see real estate investing as like so black and white, as in like has to be this, has to be that. And it really varies so much from city to city, town to town, neighborhood to neighborhood. So like, what can we do with this individual investment property? That's how I like to look at things. I do think that it's going to be a personal decision if you decide to invest in New York City, or if you decide to invest in even a certain borough, a certain neighborhood. You might have ties or reasons to why you want this over that, and that's okay. And I think that people should explore investing in New York City. People should explore investing outside of New York City and really figure out what works best for them. So if there's anything that I missed in this video, or if you have any questions for me as a real estate agent, please leave them in the comments or reach out to me directly because that's always, I love hearing from you guys.